Good morning, everybody. My name is Gareth Soloway, and this is the game plan at verifiedinvesting.com. All right, guys, so we're going to get into a lot of stuff today. We got some economic data. We obviously had the Fed yesterday. After the bell today, we get monster earnings from Apple, Amazon, and Meta. So there's a lot to discuss getting into the rest of the day. Let's follow me over here. Let's take a look at the key headlines for the day. First one's coming in with jobless claims. Now, this one's interesting to me, right? So if we look at our jobless claims numbers, and again, bear with me there. So what we see here is that jobless claims came in at 224,000 today, right here, right? So again, that's a key level to monitor. Now, the reason why 224,000 is important is that it was higher than forecast of 213,000. In addition, it was higher than last week at 215. All right, now the key is this. Last week, the 215 was higher than forecast as well. So what we're starting to see is we're starting to see economic data here coming in hotter and hotter in terms of more people filing for unemployment. So again, this number this week was higher than expected and higher than last week. Last week's number of 215 was also higher than expected last week by quite a bit. So again, I've come to you in these game plans and talked about every day almost more layoffs, more layoffs. This company's laying off 7%. This company's laying off 10% over and over again. And it looks like the trend is now starting to shift to more people filing for unemployment. In addition, continuing claims. So these are people that are continuing to claim unemployment. That number came in much higher than expected at 1.898 million versus a forecast of 1.840 million. Last week was 1.828 million. So again, much hotter than expected. Almost 1.9 million people still on the unemployment benefits. All right, so again, hotter than expected. Now, we do have the non-farm payrolls number tomorrow. Again, I think expectations are around 100,000, maybe 150,000 in jobs gains. Don't be surprised if that number is a little weaker. Remember, ADP private sector came in weaker than expected just on Wednesday yesterday as well. All right, let's continue on here, guys, as we look through to what's going on. We have Qualcomm. Qualcomm reported earnings that beat estimates on a recovery in smartphone demand. That might be a positive for Apple today. We're going to find out what Apple says after the bell. However, worries over the Chinese economy continue to be a big concern to investors, and the stock, last I checked, was down a little bit. Not much, just a few percentage points on the morning session. To be fair, there's not a lot of big movers that are big companies today based on earnings that were mentioned yesterday. Another one, Honeywell. Honeywell falling over 2% pre-market after the industrial company missed revenue numbers and forecast weak first quarter sales. So again, this is a big company, industrial company, and again, they're talking about a weakening economy. RCL. All right, now RCL here, this is Royal Caribbean. They're jumping higher by, I think last I checked, by about 5% or 4% here. They came out with forecasting better than expected annual profit on strong demand for cruise vacations. So again, there's a couple ways to look at this. Number one, people are still interested in going on cruises, but the one thing I will say about a cruise is that it often turns out to be one of the cheaper types of alternatives. When you think about everything you get on a cruise ship, all the entertainment, all the foods included, everything like that. So again, you know, how do you take this? Is it that people are still willing to travel? I think that's partially true, but are people starting to shift maybe to the lower end type of vacations versus the higher end? Just something to keep an eye on there. All right, as we continue on here, let's go down here. We do have Race, which is Ferrari. Ferrari jumped 6% on exceptional visibility from their order book and higher than expected earnings and revenue forecast. So Ferrari's doing well. There's no doubt about it. If you're someone who can afford a $300,000, $400,000, $500,000 car, then you're probably not feeling much pain in this market environment, in this economy. You're probably not too worried about inflation either. So again, they're doing well. The only thing I would mention is that I do wonder about this order book. So again, I know this from being here in Tampa and being in this area here. There's a lot of people that try to buy these and order these cars, and then actually they try to use them for a year, and then they try to sell them for about about the same or even more. In some cases, I've seen people actually sell their Ferraris and Lambos for even more than they bought it a couple years ago. I do think that there's some people that have ordered these on that anticipation, and if the economy gets too weak, you may see that start to disintegrate. Those orders may be canceled, delivery may not be taken. So again, as of now, it's fine, and the stock is higher by 6%, but we do want to watch this very closely. Lastly, Tesla to vote on changing its incorporation from Delaware to Texas. I think most of us have heard about this story, right? Elon Musk, basically, he got his pay package voided. It was $56 billion was his pay package, and again, it was invalidated by a judge. So he's basically saying, hey, let's vote as a shareholders. Do we want to switch our incorporation to Texas? Now, again, I'm just going to throw my 2 cents in here. Is $56 billion ridiculous? Yes. But when this deal was made, the market cap of Tesla was only about $65 billion. He was saying, I have to 10x this company to $650 billion market cap to get this. I don't think anyone believed that it was possible, and he ultimately did it. So again, I have a little bit of issue, and again, maybe there's some impropriety with the board, I don't know, but again, he literally made investors billions of dollars that invested at that time in Tesla, and to now renege on a pay package, I don't like it. I don't like the precedent it sets. Do I like the $56 billion that he's getting? No, I mean, that seems a little excessive, but again, I think there was a part where most people were like, he's got no shot of doing this, so sure, let's throw that carrot out to him. This is pay for performance, which is what the economy should be about, right? I mean, if you perform, you should make money. $56 billion, I don't know, but still, I think it was made because there were so many people that just said, he's never going to do it, so let's just give him this. It's really a win for us, because if he doesn't do it, we don't pay it, and then there's no big deal, and we're not paying him anyways. It's only if he achieves this does he ever get paid, right? So I think that's the kicker here, is I do have an issue with it being voided. Let the courts obviously decide it. But again, that would just be my 2 cents on the deal here. Okay. Quickly going over to the Fed Watch tool. Again, we talked about this a little bit yesterday in the live that I did, guys. And again, the live basically yesterday covering, I saw some great comments from that, and I appreciate that. I think I will do that from now on. Every Fed decision, I will go live for about 45 minutes during the press conference, and we'll discuss and we'll look at chart action. Now, again, the first thing we notice here is that we know that there's no rate cuts, right? So this is now the March one, and it's basically the March one's not going to happen. Jerome Powell said that yesterday. That's why the markets in the late afternoon ended up selling off so sharply, is because he crushed the dreams of all these people that were hoping for a March rate cut. Now, what it does tell us is May is basically a gimme. That is going to happen as of now unless things dramatically change, as is, again, going out to June, July, and even September. So again, it looks like the market is still, and this is pretty amazing, the market is still pricing in 6 rate cuts going forward into the end of the year, and that is very, very impressive to see that the market, even with the Fed kind of being a little bit more hawkish, is still calling the Fed's bluff. That's what the market's doing here. They are calling the Fed's bluff and saying, hey, you can say you're not cutting. We don't believe you. We still think you're cutting. We still think we're getting to basically the 3 and change interest rate on the Fed funds by year end, which, by the way, that may mean that the Fed even has to cut 50 basis points once or twice through this period to get to those levels. Think about that. That's pretty wild to think about. All right, so that's where we are on the Feds. Let's go to the charts, and we're going to delve right into these charts here. Here's your chart of the QQQ. This is the NASDAQ 100. Again, couple things to note. Number one, we still have the topping tail. Topping tail is the priority. As of now, as long as you have a topping tail, guys, when a topping tail forms, it is the dominant factor in the chart until it's negated. Now, how does a topping tail get negated? I've talked about this with you guys before. And I'll switch my thing back to yellow, but let's say here's your topping tail, right? There's your candle, your body's in the lower 25, your close is at the lower. Here's your top high of the tail, right? What you need to see to negate a topping tail is price has to come up, and you have to have a daily close above the topping tail high. The second that happens, that is a voided topping tail. Markets can march up. But the key is until that happens, you have to go with the probabilities. And topping tails, as I teach them, that is the probability until proven otherwise. So we do have a short-term top, at least on the NASDAQ at this point. Now, where's a good level to start watching for this market to come into? Again, the big level I have is right here. as long as we stay above this level, right? So we could really come down a decent amount more, right? I mean, on this chart, this is your trend line that I'm watching. As long as we stay here and we don't violate and break and confirm below that line, then honestly, this is just your run-of-the-mill corrective move on the NASDAQ. There's nothing to worry about here. There's nothing. Now, granted, if you ask me personally, do I think eventually we break this and we have a bigger correction this year? Yes. But remember, that's my personal view. The technicals are the technicals. This is really your unbiased view. And the unbiased view is that, all this is look, up, down, like that's really all you're doing at this point. You're kind of gently rolling on these hills of the market. Now, if you break this, that changes what's happened and you start to kind of come down like that. But again, very important to just let the charts do the talking versus anyone else or giving their bias. Again, everyone's going to have their bias. Everyone looks at the forecast. Everyone does. I've talked about how I think inflation's going to come back, but I don't know that for sure. We have to rely on the charts for the ultimate action. All right, looking at the S&P 500, guys, here's your daily S&P. That is a nasty candle yesterday. Came right after this like mini doji right there. Again, markets on the S&P, same kind of deal. You don't need to be concerned, number one, for right here. This is your first area of support, right? And again, rolling hill up. So even coming back here, that's not that big of a deal. We'll see if we roll up and go touch the $5,000 level or the 5,000 point level on the S&P. Now, if we break that level, then you start to say, okay, maybe this is something a little bit bigger. There, of course, is a couple secondary levels, but this one to me is the one over the next couple weeks that I am watching. And just to give you a price point on that, on the S&P, basically it's 4,800. If we start trading below 4,800, then I think you start to say, well, maybe a real top is in on the S&P, and maybe it doesn't get to the 5,000 level that I think it could. But until that happens, we have to go with pullbacks into next buy programs to the upside. All right, looking at the U.S. dollar here, this is important. No, this is the 10-year, excuse me. So we do have something going on here on the 10-year. The 10-year is starting to collapse. Even after interest rates bounced yesterday, the dollar went up. We have seen interest rates roll right back over, and they rolled over yesterday too, and even today we're going lower. So again, this is the market calling the Fed's bluff. The market's still saying interest rates are going down. We don't care what the Fed says. We don't care how hawkish they are. We don't care that they say that they're not cutting in March. Interest rates are going down. And what you can see right here, guys, is basically what we have is a situation where you have a trend line right here, and we've now broken that, right? So connecting this low to this low, and we've now broken that. Your next support level is going to be right here around this 3.77% level on the 10-year, and we'll see if that holds. Now, if that starts breaking lower, now we're in a whole new ballgame, because right now where we are would be about 150 basis point or a little bit more cuts from the Federal Reserve. We go much lower, all of a sudden the market's starting to price in even more cuts, which then you have to ask yourself, what the heck is the economy going to look like if they have to drop rates even more than cutting 6 times the rest of the year? So just something to keep an eye on there. I do think that's worth keeping on your radar and continuing to monitor. All right, U.S. dollar. Now, the U.S. dollar has been a little different here, right? So the U.S. dollar, while the 10 years rolled over, the dollar's actually stayed sideways, continues to make a bullish pattern. So this is, again, very interesting because usually the dollar and yields go together. So there's a little disconnect, a little divergence starting to occur here with the U.S. dollar. Now, again, I still think there's a chance we go up a little bit more on the U.S. dollar, but I still think, again, eventually the dollar is going to start to roll over here. And again, that will be a positive for gold and the metals and commodities as well. All right. I want to get into a couple of these other charts real quick, guys. Let's quickly take a look at what's coming out in terms of earnings today. This is your Apple daily chart. And again, I've basically put in the trend lines already, right? So we have this low right down here, right? We have this pivot right here, and we still haven't touched it. So if Apple sells today, your first line of defense is right around 180, this level right here. Right? That's $180. That's your first line of defense. If Apple rallies up, your first big resistance is going to be this 198, 199, 200 level, this double, which would be then a triple top level. So those are your first lines of defense: resistance on the upside, support on the downside. Now, if, let's say, Apple drops on earnings and takes out this line, that would be huge for the market. And not just the market for Apple, but by influence of how powerful Apple is for the market, that would be epic. The reason I say that is because we're not talking about a short-term, couple week trend line here, or even a month trend line. Literally, we're going back a year on this chart, right, to this low. The longer a trend line goes back, the more powerful a trend line is, which means that, sure, it's powerful as support, but if it breaks, it's equally as bad on the opposite side. The fact that it broke is a very big negative. So if we do see a breakdown in Apple below that trend line, you will start to see support coming in around 174. This is a pivot point back here, right? Right here and right through here. So 174 would be your next stop. But after that, you're looking at testing this low here at around 165. Now, if 165 breaks, now all of a sudden you have low, higher low, and now if we break that, lower low, and that would be another nail in the coffin for further downside on Apple. Now, again, I'm going to be flat with you guys here. I have no clue what Apple's going to report. I don't know if it's going to be taken as a great report or if it's going to be a bad report, if it's going to go up, if it's going to go down. But again, my job is to know my levels and know what is bullish, what is bearish, so that when those earnings come out, I can be ready to react, whether I'm day trading, swing trading, or even long-term investing. Quickly going to Meta, guys. One thing I want to show you on Meta is, number one, it's ridiculously overbought. And it did pull back yesterday a little bit on those Google earnings because of the ad sales decline from Google, right? We know Meta does a lot of that stuff with ad sales and their revenues and so forth. But look at this channel that I put in. It's kind of an unusual channel because it's kind of in the middle here of this big gap. But if we look at this, it does show us something, right? It does give us a pinpoint level here, right through here, and we just hit that high a couple days ago. And then the lows right through here, right through that gap area, and right to here. So we are at resistance just above 400 on Meta. Again, I think Zuckerberg's going to talk a lot of AI. We'll see if that's enough to continue to push it up. But again, to be fair, I am a little short on this position. Not a big position, but I am a little short on Meta. And I plan on holding not just into earnings, but going out a little bit further. So we'll see how that goes. Will I be out of the money a little bit more per the earnings today? That's a possibility. But again, that is how I am playing it. I'm playing the resistance here. If it goes up, then I have to go back to the drawing board and I have to say, okay, well, what's my next trend line? And again, to do that, by the way, you know what I could do? I could raise this, right? You can raise your parallel, and now you have another parallel, right? Right through here, right through here, right through here, here, and here. And that could give us another level up there. I mean, there's a lot of different ways to figure out where this could get to before it stalls out if it continues higher on earnings. But again, I'm playing the opposite side of this. I'm playing on the short side based on an overbought market. Lastly, Amazon reports earnings, guys. So again, take a look at Amazon here. Amazon, classic trend line here, beautiful trend line, in fact, right through here, here, and we just touched this. It obviously fell back yesterday. Can Amazon break through this trend line? If it does get through this level on earnings, then you have to believe that it's going to go to the highs, right? You have to think it's going to 185, which is basically 185, 190. It's the all-time highs. But again, there's no doubt this is resistance per this line here, right here. And in fact, you could even make a case that you have additional resistance right in here as well. If we take a look right at these lows right here, and you draw that line out, it basically gives you that same exact level. So again, Amazon's at resistance, Meta's at resistance. Apple's not really at resistance, but it's also not really at support. It's kind of in no man's land. So that one's a little bit more murky. Generally, the resistance would tell us it could pull back. But again, my only caveat here is we're in this market where if they start saying AI, like there's probably some formula that if you say AI 50 times in a conference call, your stock goes up. I'm sure there's something like that, just based on how kind of crazy markets are these days with things. Okay. Follow me over to this other chart, guys, touching base on some crypto action real quick here. So we do have Bitcoin, and again, Bitcoin following my game plan perfectly in terms of going right up into this resistance and then pulling back. Granted, it's not a big pullback, but again, you are seeing just that little pullback off resistance. Basically, as a technician, you're just watching this area. Do we pull back more and more, in which case you start to favor a touch of the lows down here, maybe even a break lower? Or do we kind of consolidate and then break out, in which case we go towards the highs again, the $49,000 level, maybe $50,000. So again, right now it's playing off resistance, which is what you anticipate. It just ran into that line. It's bouncing off. Now we want to watch what's coming in the coming days. Let's look at Ethereum real quick here, guys. Ethereum continues to be stuck in a bigger channel here. And again, it's just really, this is just playing pinball or ping pong with this channel level, right? You're kind of at the midpoint here. My only concern with this is, are you making a little bit potentially of a head and shoulders pattern, right? So it's not the prettiest head and shoulders in the world, but you could make a case that you're kind of at a point here. Bear with me as I bring up my drawing tool. But basically where we're at this point here where we have this, and then are we kind of doing this over here and potentially creating that bear pattern formation. Now we have a very clear-cut trend line here, guys. There's a dotted line here from the channel, but it's working perfectly as a trend line. That is the line to watch. We trade below here, we're going down here, all right? If we can bounce, then you, again, once you get, I would say once you can eclipse this area right here, which is around 2,500, you should retest the high end of that channel. So again, watch this pattern, this possible head and shoulders pattern. Let's watch and see how that progresses over the coming days. Quickly looking at Solana. Solana real fast here. Not much new to report. Ran up into resistance and then has backed off. This was also a 50% retrace, I believe, on the chart as well. And again, it's come back a little bit off of that level, kind of doing the same thing that Bitcoin is doing, but again, just a little bit more volatile on Solana. Lastly, Avalanche. I'll touch base on Avalanche here. Avalanche, a beautiful channel here. And again, let me just zoom in a little bit on this so we can get a little better, clearer picture. But look at the channel, parallel lines, and again, marking off the levels very clearly here to right here, right through these lows, right through here, and then gave us that top. Then this one is parallel right through here and here and here, right? So this basically gives us a reason why when it hit this line, it bounced here, and this is why it stalled out right there. I did go short with members of Verified Investing Crypto right there. We are in the money about $3 right now. So it's actually about 10%, just under 10% gain. I'm still holding on, at least looking for a test of this low end. But again, we know if we break above here, you start running back up. If you break this, then you're starting to head sharply down. Until then, you're going to bounce around inside of these two ranges, okay? And lastly, just quickly going over this crypto, guys, we have, this is Cardano. Cardano's making a little bit of a wedge pattern. Very clearly, we see right here, we have low to low, and we have high pivot to high pivot to high pivot, right? And you can see how when you bounced, you went right up to that line, hit, and then you're pulling back. This wedge is by default, right? You have a wedge pattern, and essentially price is consolidating inside. Generally, what you're looking for is which way does it break. If it breaks this way, you should get a big move in that direction. If it breaks this way, you get a big move in this direction. So which way is this going to go? If it breaks, it goes here. If you break above here, I mean, at least you probably go up here, but maybe you can even test your high levels up in that range. All right, quickly going over oil, guys. Oil, again, not much new here on the oil chart. Again, kind of stalled out, pulled back the last few days, getting a small bounce. Again, my target remains 80 to 83. We went to 79 before this recent pullback. Nothing new to report there. We are looking here at the chart of natural gas, which is pulling back a little bit after a 2-day bounce. Still jumping on this level. I still have not added my second half of my position back, which I had taken a small profit on just, I think, last week on this little bounce right in here. So again, I'm just going to continue to be cautious here as natural gas continues to be a very volatile trade. Gold, guys, gold is inching up. I still think your borderline breakout. I still think within the next month we are above this all-time high and establishing ourselves above that. I think everything is aligning. Inflation's going to remain somewhat high. The Fed, again, is going to cut rates, even though they say they're not. Markets are telling us they are. All of these things, including the national debt and everything like that, continuing to stack up. One little side note, guys. So Costco's selling gold bars now, and this will just be a little tip I'll leave you guys with here. I'm not going to go into other charts. I'll cover palladium, platinum, and silver tomorrow. But so Costco is selling gold bars, and I was like, oh, they're probably charging an arm and a leg premium. They were only charging about, I think last night when I was on the Costco website, you could only buy 2 with a membership, so 2 bars with a membership, not a lot. But the point being is they were only charging around 2,800, 2,080. So it was only about a $30 to $40 premium from where price was. Not only that, but if you have your business membership card, you get 2% cash back, which basically means that you're getting gold at spot or even a little cheaper than spot. There's a little tip for you if you don't want to pay some of the premiums that other players are charging. Granted, you can't buy a lot. They limit it, but I did pick up 2 bars of gold last night and again, basically got it for spot or even a little cheaper than spot through Costco. So shout out to Costco on that front, on that one. All right, back to the center screen, guys. Let me jump in here. You guys have a wonderful rest of your day. Look for those earnings after the bell, guys. That's going to be big. Watch it right here on Verified Investing, on Trading the Close, and you guys rock. Thank you so much for all your kind words. I'll talk to you soon.